So entry module, and today we're going to start with formation entry. So these are the basic entries which we are going to use in this program, and we're going to have fun with these entry modules. Actually, some of them you know, some of them you don't know. So let's kick in. So today we start with formation entries, okay? Formation entries. Now, mind you, when we talk about formation, we are talking about minor structures, okay? About talking about minor structure, and I know you've passed through the video concerning major and minor structures, so you understand what when I say minor structures. So minor structures are all those structures found in the major structure inside the big structure. So those can be termed as formations. The formations. Now, these formations can be used as entry. Why? Because in the topic of areas of liquidity, we talked about types of areas of liquidity. And I said areas of liquidity can be found in a range of highs and lows. So that highs and lows, that is actually an area of liquidity. So if it is between areas between highs and lows is an area of liquidity, so even the formations can be an area of liquidity. Now the shift is we can use formation as entry or area of liquidity. The difference is if you want to use formation as an area of liquidity, it must have a high risk, very high risk, or it is in the higher time frames. So if it is in the higher time frames or it has a very high risk, that means you will use formation as an area of liquidity, meaning you'll wait for the market to come in that area and then create a shift in the lower time frame in which you can use that. But if you want to use it as an entry, it must be in a lower time frame. Let's first a lower time frame, because lower time frame offers a what? Low risk, which is the second category. Okay, so it has to be with low risk. So you must understand that. Now, these formations, we have types of inside formations actually. Now, those inside formation are as follows. I mean, those types of formation are as follows, the types. Let me do this. So the types of formations. Now, number one is inside formation. Inside formation. The inside formation, these are structures formed inside a major structure. Now, here is the pure minor structures, meaning we have our major structure, and then before we have a break of structure, the major break, we have inside formations. So this inside formation can be used as what? As entry. Now the trick is you must first use the first formation if it is not yet consumed. What do I mean by that? So you may find a structure like this. It has a lot of formation, but those formation are consumed before we have a major break of structure, a BOS. Now you can see if you mark this formation, you see this formation it was already consumed. If you mark this one, you can see this formation was already consumed. So you must make sure first to check whether the formation was not yet consumed or was consumed. If it is consumed already, you'll use this next formation, which is that one. So you'll find the market coming to that. Okay. If it is yet to be consumed, then you'll use the first one as your entry. And to be sure that the formation is already consumed, you have to use the tool which is called the Fibonacci. You must use and measure the formation and see whether that formation was consumed 50% of that structure. So if it was consumed 50%, then that formation is already consumed. I mean, we'll see in the examples, and I'll show you how these formations are consumed and how to measure whether the formation was consumed or not. So that was the first type of formations. The second is outside formation. Now, outside formation, these are minor structures found after the BOS, after the break of structure. When you have your structure here, and soon after the break of structure, we have an outside structure created after the major break, all right? That becomes our outside formation, meaning the market will come to that formation and then activate our entries. Now, there is a catch here. There is a catch. In outside formation, many students or many traders confuse between outside formation and just a structure. This scenario is very different to this one. It's very different to this one. This is a complete new structure, but this one is just a formation. Okay, so if you see a formation with a lot of inside formation in it, that is a new structure. You need to treat that as a structure, not as a formation. But if you see something like this, that is an outside formation, you can use it as entry. I don't know if we are going together here.
Yes, we are.
Good. So do not confuse these two scenarios, okay? Do not confuse these two scenarios. And number 3, which is the last one, we call it an FIF. This is formation inside a formation. Formation inside a formation. What I mean is when you have a formation and then that formation makes another inside formation in it before breaking our major, that becomes an FIF. So you can use that as an entry point. We can use that as an entry point. So this FIF actually is very powerful, and when you find it, it actually deliver good results. But it's very rare to find. So you need to be keen in analyzing the market. So those are the three types of formation which we are going to use as entry. So let's go to some examples and see what we are talking about. So I'll show you first from the PDF, and then we go to the chart to see some entry or two, which I took this week, and we'll see what happens from there. Now, you can see this is the example of what we are talking about, the formation. We had a major breakout up there, and then we have some inside formation. That was an inside formation, and this one also was the inside formation, but this inside formation actually produced another inside formation in it. So it is an FIF. It is an FIF. And the way we mark formation in the validation, we mark let me put this way. In case of selling, in case of buying. So this is a validation, this is the invalidation point. This is validation, this is invalidation point. So in the validation, we mark to the body of the candles that produce this low. But in the invalidation point, we mark the last wick, the longest wick from those two bodies. In the validation, we mark the bodies. In the invalidation, we mark the wicks. So understand the way we mark this formation. So you can see here, we marked the bodies and not the wick. Although in some scenarios, we'll see later, when we have one candle formations like this one, we can just use the wicks at the top. But I mean, that scenario, we'll check it later. So that is the first example. You can see another example here. We had our break structure due. And this is like a change of character because we were in the downtrend, and then we produced an impasse, making this a change of character, a transition, and we have what? Several inside formation. Then look at this one. This actually is very interesting. We have this formation with an inside formation in it that was taken already. At first, we had this move, and then the market came to for the second time, and then we take the last formation, the first formation, which was not consumed and it was clean, and we had this entry right there. Right there. Another example, we can see this one here. We had our shift below here, and we have several formations. This one was consumed. This one was not consumed, but also this first formation was consumed, but not 50%. You can see that. And the way we measure it by using Fibonacci, here we measure the validation to the invalidation point, and then you see if whether the market is already consumed, has already consumed that formation for 50%. If it is, then that formation is already consumed, you cannot use it. But if it is not, then you can use it again. As you can see here, the market came back for the second time and activates again, and then you have that sell. Yeah. So you can see the way it is. Again, this one is an inside formation. A shift there, an inside formation, the market came to that point and activate that short sells. And of course, you can see this was the break, and we had this formation here. You'll be asking, okay, what is happening here? We had formation below, which were not consumed, why the market ended up with this position. So actually this one is one of the scenarios in zone flip. So we are going to study that when we reach that topic. So don't worry about that. But just understand this is also an inside formation. The market activated that. Cool. So those are few examples on inside and outside formation. Actually, on formation entries, you can see this here after the break. Inside that, this is a formation. This is a big formation, and inside that we had another formation. The market consumed a little, but it was not 50%, and then the market came for the second time, activated our entry, and then we took that. So those are some few examples on formation. So I'll show you some few trades which I took this week using formation entry model. Using formation entry model. So the first one, actually this one, and I've created the video today and I explained this. It was a very simple entry on gold. This one actually, we had a break of structure here, and inside that break of structure we have inside formation. It was not tapped yet. Market came to that point, activated the entry, and then we took that. Beautiful trade. Beautiful trade. Now mind you, right now I'm teaching you how the entry looks like. I'm not teaching you how are we going to take the entry, actually, the approach to the entry. I'm just teaching you how these entries looks like. Okay? But the way to take those entries, to approach those entries, that is another phase, okay? So don't worry about that. Do not ask me about the directional bias. Well, how did you took that entry? No. Just check how these entries are actually looking. So you can see another one here. After that shift there, we have this formation inside. We had that activation. And then the market went for a few pips and then we were stopped out. That one was first entry. And actually I took another entry on GBP JPU, GBP USD. This one here, it was a very clean entry. This one here, we had our shift, a change of character with inside formation. We're going to talk about the types of shift later. And we had a break of structure with inside formation. And actually this was an FIF. Why? Because this one here was the big formation. And inside that, we had our inside formation in it. So that was an FIF, a good trade again, using formations. Using formation. Took that entry, 100 pips collected on that particular setup. Another trade was in Bitcoin. I took this trade, but I was stopped out. I don't know if I can find it. Yeah, there it is. I think it was in the 1 minute. I was stopped out, but the entry went for some pips. You see that one? We had our breakout structure above, and we have several inside formations, but this first formation at the bottom was not yet consumed. So the market came to that point, activate our entry, we move up, but it failed to hit our take profit, and then we were stopped out. Crazy, but it was good. It was a good trade. This shows you that it's not guaranteed that you're going to win most of the time. So you have to be prepared in scenarios like this, stopped out and that. So it's okay. It's okay. Another trade was in Euro USD. Actually, this one was the first entry of the week, and it was a sniper entry. It was a very good trade, actually. This one here. You see, we had our change of character in the 15 minutes. I'll show you. And this are the inside formation. But the one I was interested was this one, because this one was the inside formation. It was not tapped yet, and we were not yet to cover this gap. So the market came to that point, activated my entry, and we secured like 100 pips. But the 15 minutes was the one I used as my base, my constant time frame. And in the constant time frame, you can see this was the change of character, and it has inside formations. And when you refine that in the 3 minutes, you will get that formation which I used, risking maybe it was just 4 pips stop loss, but I risked 15 pips. I always risk 15 pips. We're going to talk about that risk management. So that was another good trade using formation. So any question about that? Any question about the lesson?
No question at all. Let's proceed.
Yeah. So this one is actually a beautiful entry module you can use, and it is easy and it is simple. And it is one of the basic entries which we are going to use or most of the time. So that's it. If you have any question, you can fire away. If not, that is all about formation. But I'm gonna give you one assignment. You just go and mark for me formations, and I need 15 examples. Actually, just 10 examples. So you can choose in any, you can find any examples on the types that we have learned, and screenshot that example. And I want you to put in one PDF all the screenshot. I need 10 screenshot bind together in one PDF. So if you finish, you can just send me, and then I'll check whether the lesson is well understood or yet.
I'll do that.
All right. So thank you very much, brother. After I see the assignment, I'll send you another video for another entry. Or if we will reach to our timetable, then we can discuss another entry from there. So thank you very much, bro.
Actually,